Having a bit of a pullback on our market today, so this weakness continuing over the past couple of days. And today, if you look at the top 40, it's a real hodgepodge with no discernible trend on any sector.
Afternoon, Stephen. Yeah, it seemed to be sort of all over the place. Some of the resources were up, others were down. Obviously, a bit of concern coming out of China with the interest rate hike yesterday.
Well, as we were chatting to Eugene just a short while ago, it looks like the metals markets, at least the copper market, is looking past that interest rate hike, seeing it really as a sign of strength in the Chinese economy rather than anything ominous. Do you think this is just a knee-jerk reaction from our part?
I think, as I mentioned when I was on the show 2 weeks ago, I mean, our concern is that China will need to raise rates and tighten considerably this year, and our view is that that's going to put pressure on the base metal prices. So I would be wary of copper up at these levels.
Would you also be wary about some of our diversified miner at these levels?
Yeah, I guess Anglo-American, BHP Billiton. I mean, they will report very sort of solid earnings in the next couple of weeks, but I guess FY11 will be slightly more difficult in our view.
How about the earnings we've seen to date, Johnny? We had Anglo-Plat, Harmony, ArcelorMittal yesterday, and that share price pulled back yesterday, but up to 2.6% today. So do you think the market's just had a little bit more time to digest those numbers?
Generally, results to date haven't been great. Amplats, they sort of moved guidance down quite a lot ahead of that result. The divvy was quite strong, but actually earnings were a disappointment. So we haven't seen great earnings yet coming out of the stocks. I guess the big reporting period will be in the next sort of 2 to 3 weeks, and that will be key to watch. But up to now, I think the results have been generally quite disappointing.
Johnny, do you think the market's expectations are maybe a little bit too high for those companies?
Well, not necessarily for sort of the resources. I mean, I think there will be very strong earnings coming through now from the likes of Anglos and Billiton. But generally, as the market as a whole, we do think earnings expectations do look quite high. I mean, the market's trading on a P of 17, with most forecasters saying that will reduce quite rapidly as the earnings come through. But we still see quite bad news from a large part of the universe. The banks will be reporting February, March. Wouldn't be surprised if we start to see some negative trading updates from them as early as next week.
Oh yeah, Sappi also out with numbers today. It's returned to profit for the first quarter. Headline earnings per share of 7 US cents. That's from an 11-cent loss, and yet those shares this morning also coming under pressure. So it looked like they also missed the mark.
Yeah, it's the first quarter results, so you probably don't want to read too much into that. But they did give guidance in terms of the second quarter, where they're saying the second quarter would be weaker than the first quarter, and perhaps that's what the market was concerned about. I do see that they've put through price increases in Europe, generally blaming higher input costs, but I guess maybe the market is doubting whether those will actually stick, and therefore taking a view on the fact that those price rises won't actually stick and come through.
This is a share price, though, that's up 13% so far this year. We've also had Mondi continually up on the market as well, so it looks like the attitude towards paper producers has changed this year.
Yeah, they are slightly different companies. I mean, we've held both in the past. Currently, we're only holders of Mondi. But Sappi is slightly more exposed to top-end, high glossy end paper, whereas Mondi is slightly more sort of below that level. And we believe that demand for their paper is actually a bit better than for Sappi's.
So less glossy paper, but more glossy prospects in that case. Ital Tile, those shares down as much as 4.5% this morning, and we had that very bad news that quite a lot of its executive team was killed in an aircraft crash over Plettenberg Bay, including the CEO. So another case of a knee-jerk reaction. Is this disastrous for the group?
Not a company obviously I know very well. I mean, obviously very sad news. Obviously our condolences to the families of those individuals involved. But yeah, I don't really have an opinion on their investment case at this stage.
Mm-hmm. Just looking at the overall market levels at this stage, we seem to be battling to make it back up to that 33,000 level. So we've been testing that for the past couple of weeks. When do you think we get to break above that, and what will it take to push us above that?
Either we get a rotation back into emerging markets away from developed markets. I guess year to date we have seen a swing the other way, where the developed markets have rallied at the expense of the emerging markets. Alternatively, just higher earnings from this point onwards. But generally our view is that the market is expensive, and a return to sort of new highs is in our view not on the cards.
So how are you positioning yourself at the moment then, Johnny?
Generally, where we have sort of discretion for clients, we low equities. And then within our equity portfolios, we generally have, what we believe are sort of defensive equities. With the rand hedge bias, we think the rand could still weaken from where we are at the moment.